Alright, so third video today. This will be a short one. I promise this time. Interesting take, I guess, on the silver to gold ratio, which is actually currently around 80 to 1. In previous times when that ratio came down, which Cliff High said is about to happen if his data is correct, and the different time frames that this actually occurred. Over the last 100 years, the major peaks and troughs of the silver to gold ratio have marked historic turnings in the markets. As the ratio surges through 80 to 1, is the gold to silver ratio trying to send us a major warning? Submitted by AGXIIK to Silver Doctors. February 2016 is, again, silver to gold ratio is 80 to 1 and rising steadily. Is this an indicator of worse times, more economic stress, and banking problems? Correlation and causation are at work here. I'll leave readers to decide for themselves. The peaks of this critical ratio are the peaks of economic stress. And here are some major turning points as far as the silver to gold ratio are concerned. 1931, September, 78 to 1. The Depression bites hard. Gold is a monitor of fear. July 1940, 97 to 1. Winds of war are blowing hard. May 1968, 16 to 1. Lots of war over there. Dow Jones is high. Inflation is low. Precious metals are kicked to the curb. April 1972, 31 to 1. Watergate. War is going badly. Higher inflation and taxes. Wage and price controls. 1973, June, 45 to 1. Losing the war, recession, Dow crash, post-gold standard, inflation and joblessness high. 1975, 42 to 1. Dow at low, inflation and unemployment hit 10%. 1976, January, 26 to 1. Pivotal presidential election year. Hopes for revival are high. December 1979, 14 to 1. And let me stop for 1 second, because I've talked about the Webbot saying, aside from $5 a day moves in silver coming, to be followed by $20 per day moves in silver. Again, with deflating currencies and stuff, that's easy that can happen very easily. But it also said this crazy 70 plus 1, which right now it's 80 to 1, silver to gold ratio, again, would come down. It's been in the data many times. It'll come down to something normal. You're going to see it down to 30 to 1, 20 to 1, 16 to 1. It said it even looks like 10 to 1. And at some point, although maybe extremely briefly, at parity, 1 to 1. But there wasn't a whole bunch of data on that. 10 to 1, 15, 16 to 1, 20 to 1 was in there, for sure. 10 to 1 sounds absurd, doesn't it? Maybe you didn't hear what I just said. That's already a historical fact, and it wasn't that long ago. December 1979. Old J Snip was 2 years old. He's just 2 years old. Leave gold alone, they say. Little Meatloaf. I think that was Meatloaf for you. Sorry about destroying that song. 1979, December. 14 to 1. 10 to 1's crazy. 1979. 14 to 1. The gold and silver rush is on. Silver skyrockets in price. Thank you, Bunky. 1980. 41 to 1 with gold. and gold and silver are both near their peak. So think about buying silver in 1979 December. It's 14 to 1. 1980 March. So December, January, February, March. Just 3 months later, it's 41 to 1. So normally the lower the number, the better, but not when you're buying it. You want a high number when you're buying it. If this, looking at what's happened with these in this, not really a chart, but a little timeline of events. You want to be buying silver when it's 80 to 1 with gold. Oh, I'm sorry, it's right there right now. So, like I've been saying, buy some silver. Get it some, if you haven't already. Because as I've said many times, if the only thing that happens, which it's not going to be, but if it by chance was, the only thing that's going to happen is the silver to gold ratio goes down. 80 to 1, 60 to 1, 40 to 1, 20 to 1. How about 20 to 1? It's been 26 to 1, it's been 14 to 1, 36 to 1, 16 to 1, okay? It's already been there. 20 to 1, you know it's going to happen. If that were to happen today, your silver just went up 4 times its value. Just right now. 80 to 1, 20, 40, 60, 80. Right? That's 4 times. Then take into the effect of what's happening in the club's plan to try to usher in the New World Order. They have to have everybody feeling some serious financial pain. You can see the whole world devaluing their currencies. Food prices and other prices are skyrocketing. Imports are skyrocketing in other countries. The price of gold and silver are absolutely absurd in some other countries just because of the devalued dollar that they have. Well, that won't happen here. Save it. It will happen here. It has to happen here because they have to have you feeling some pain. They must. So then you take that into consideration. 80 to 1 coming down to 50 to 1, 40 to 1, 30 to 1, whatever, 20 to 1. And the price of those metals just going up because of the uncertainty in the world and the fact that paper assets aren't assets, and people finally figure that out as their retirements get absolutely destroyed, as many pensioners are finding out right this second. I've already done a couple videos recently on that note with the pensioners. Where were we? 1979, 80, 1983, it's 36 to 1. Interest and tax rates are down. Economy starts to pick up. 1986, October, 76 to 1. Economic and banking headwinds. Russian and currency crisis abound. 1991, January, 100 to 1. Start of major banking crisis, housing crash. 1,000 banks were closed. Not in 2008. Banks got the $800, $900 billion TARP bailout. And then trillions from the Federal Reserve on the down low. Thousands of banks were closed. Please. Not this day. 1991, September, it's down a little bit, 92 to 1. Continuation of bank and housing crash. 2003, 79 to 1. Culmination of tech wreck. November 2006, 49 to 1. Couple months before 2007 through 9 housing and market crash. November 2008, 81 to 1. 1 month after Lehman Brothers crash. April 2011, 32 to 1. I thought to myself, 32 to 1. I don't really remember that. That ratio was 32 to 1. I looked at before I did this video. I looked up the chart. Holy crap, 32 to 1. It was. It happened. 2 months after the gold and silver price peak and price crash, an outlier event. And then we have February 2016, 80 to 1, which is where we are right now. And he says, let the good times roll, not. Note that the swings have become more radical and violent in the last 40 years. The systemic stresses grow daily as the gold to silver ratio climbs. the chances are much better that gold will go up significantly in price before silver. Silver is a lagging indicator. I surmise gold goes up first because it is a metal that means something to central banks, central governments, and wealthy individuals. Silver is the poor man's gold. And when the vast majority of people realize they are behind the curve and must acquire precious metals, they go to silver. While silver is more of a commodity metal at present prices, imagine its value when its price builds to the point that the GTSR is 20 to 1. Gold to silver ratio is 20 to 1, and gold is $2,000 an ounce. That would be nice. That would be nice. Because that would be 20 to 1, that'd be $100 silver. And remember my weakest example I've given? When I said, imagine if silver can only do $100 an ounce. That's the, we thought 400, 500, 600, web bought only $100 an ounce. And you are cost averaging at 20 bucks or something. Hell, 30 bucks. Maybe you went crazy when silver was 30 bucks. That means 1,000 ounces cost you $30,000. Now worth $100,000. Are you going to be real upset that your $30,000 turned into $100K? Nothing happened. Just it's been sitting in your safe for however long. Some of us cost averaging 18, 20 to 1, wherever you are. Man, $18,000 is all it cost me for 1,000 ounces of silver, and it's worth how much? 100,000? Wow. Oh, and again, that house, that was a $200,000 house. Housing collapse 2.0. It's worse than the first time. It's collapsing. It's worth 100 grand. Oh, it's a beautiful house. It's got 2 acres on it. Oh, it's our dream house. Hey, got that house for sale. You into precious metals by chance? I didn't used to be, but now I am. I've got some silver. Do you want to do a trade out at today's prices? Because I know you've seen the chart. It keeps going higher. Yeah? You interested? You can say no. No? No problem. Let me go unload my silver, and I'll make a deal with you. Done. So, that is my plans should these events occur, as I think they just might. Doesn't mean someone can accept silver for their house, but they might. And the good thing is, okay, so you don't want to take that? Okay, no problem. Let me run around to a bunch of different coin dealers and offload, well, I'll say small amounts of silver at each one. You write me a check, you write me a check, you write me a check, or whatever. They're usually, I've never had one that wasn't good for it. Go to the bank, their bank. Like to cash this out if you don't mind. Oh, it's $8,000, $9,000 worth? Yeah, that's a big 10-4. Thank you. Thank you. Thank you. Thank you. Now I will go make the deal. And here's another thing. Let's just say you don't really play your cards right, so to speak. And you say, I cashed all my silver or gold in, and I got a big lump sum. I took the check. It was from a big company like APMEX or somebody, and I took it and sold it off to them. They gave me the check, or they wired it, whatever they did. It's in my account now. It's showing up my bank account. It's got $80,000 or something. IRS clearly is going to see that, so I'm going to have to write that down as income. Okay, so you're going to pay whatever you pay taxes on now. Your income just went up $80,000 for 1 year. You got to pay taxes on it. Again, I'm cost averaging at 20 bucks. Now it's worth $100, so my $20,000 silver is worth $100,000, and I got to pay. Again, it depends on your salary and how much you make now, but X amount in taxes. You're going to say, who really gives a crap? So, the bottom line, keep stacking. It's at 80 to 1. It's the perfect time, because not only is it 80 to 1, it's not 80 to 1 when it was 30 or 40 or 50 to 1 recently and prices were high. It's prices are low, very low for silver and gold actually, and it's 80 to 1. So essentially, in my mind, it can only go up from here. The price of silver can only go up, and the ratio can only come down. Yes, it can fluctuate a little bit, but Cliff High seems to think, and he sent me the email, I talked to you about it the other day, that ratio is going to be coming down shortly, according to his data. So that, combined with other things I'm seeing, happening in the world, I decided on last Friday, and I told you I did, I pulled the trigger on a little bit more silver. I'm not waiting. This isn't a game where, let me sit and see if I can find the lowest spot in silver. Like I said, when you invest in your job and you have a 401k or retirement, whatever it is, you're putting money in every week, every bi-weekly, bi-monthly, whatever it is. You can't stop it. Oh, the Dow's down 600 points today. Call my HR department. Have them call the Fidelity. Fidelity, don't invest any of my money today. No. It's the same every week, every 2 weeks, or whatever you're set up as. Your money's going in there. Market's collapsing. Oh, let me put some more money in there. Market's still collapsing. Let me put some more money. Now, if you controlled your destiny and handled your own accounts, handled your own investments, you could stop that. Oh, nope, not putting any money in this week. It's going down, it's going down. Oh, do I think there's a bottom? Now I'll put some money in there, and let's see if it goes back up, right? If you wanted to play the game. But we have so-called experts, people like Fidelity, and they've got these financial advisors that'll tell you the best things to do. And you know what it takes to be a financial advisor? We need you to take this little test to work for our company. As long as you get a passing grade, you can now call yourself a financial advisor. That's it? Yeah. So you're now an expert. Yeah, technically, yeah. Right. And every time the markets crash, where are all them financial advisors? The best, smartest, brightest in the room. Where are those guys? Many times they're jumping out a window. Take care.